Hello, welcome to the ninth module of the course Corporate Finance, and we'll be discussing on corporate finance law and regulatory framework briefly. Corporate finance laws and regulatory framework, and we'll be able to look into few countries, looking at it in the real world. And for this module, we will look into corporate finance law in selected countries. We'll also look at the comparative analysis of global regulatory framework briefly, and we'll look at the implication for local versus international, multinational multinational businesses. Corporate finance operates within a complex legal and regulatory environment that varies across countries. And this framework governs how firms raise capital, disclose information, and also protect investors and manage cross-border transactions. Having an understanding into this law is very, very important for you in order to be able to know how to maintain compliance and also optimize financial strategies when the time comes. And we will look at the laws in various jurisdictions, highlighting both the global similarities and the challenging, difference in the challenges that they face. Now, the purpose of regulatory framework is actually to establish the rule that guides corporate behavior. It's to establish the rules that guides corporate behavior. And they are actually designed to, one, protect investors' rights and safeguard stakeholders' interests. Also, they are designed to be able to ensure corporate accountability and transparency. And lastly, to be able to facilitate and regulate the process of raising capital. And this framework are shared or shaped by countries' historical, political, and economic context. And when we look at it from the angle of Nigeria, which is a legal framework in Nigeria, Nigeria's corporate finance law are governed by two main bodies, and we have these are the Complaints and Allied Matter Act, which is CAMA 2020. We also have the Security and Exchange Commission, which is the SEC of Nigeria. And for the CAMA 2020, it's introduced significant reform to improve the ease of doing business, such as online complaint registration and the creation of single-member complaints. We have a better understanding of it when we go through the notes. And for the SEC, which is the Security and Exchange Commission, it regulates the capital markets and sets rules for public offerings, insider trading, and corporate governance. For the United States regulatory system is overseen by the Security and Exchange Commission, SEC, and the laws include the Security Act of 1933, which regulates the issuance of new securities, and the Security Exchange Act of 1934, which governs the trading of securities in the secondary market. And these laws mandate extensive disclosure to protect investors and ensures market integrity. For the United Kingdom, the UK framework is influenced by both the statutes and the common law. And key regulators of the legal framework for corporate finance include the Financial Conduct Authority, the FCA, and the Prudential Regulation Authority, the PRA, and the UK Corporate Governance Code, issued by the Financial Reporting Council, is a key document that sets principles of good governance, including board effectiveness and shareholders relation. And for the European Union, it uses a mix of directives and regulation to create a unified financial market across member states. And the Market in Financial Instruments Directive and the Capital Requirements Regulation are central to this framework in the European Union. And the goal is to ensure consistency, transparency, and fairness in financial markets. Looking at the similarity globally and the differences, as per the similarities, many jurisdictions have moved towards greater transparency. They have moved towards greater transparency, investors protection, and also an enhanced corporate accountability. And as per the difference, despite the global convergence, significant difference remain due to unique legal traditions. And for example, when we talk about law on the environmental, social, and governance, which we will talk on in the last module, the 10th module that we'll do next. The law on the ESG reporting is, are rapidly evolving, with some countries mandating detailed disclosure, while others move more slowly on this part. And lastly, looking at the local versus multinational businesses as it pertains to laws and regulatory framework. Corporate finance laws and regulatory framework shape how firms raise capital, disclose information, and also govern themselves. And while both local and multinational businesses are bound by regulatory compliance, the scope of and implication differs significantly. For local firms, they primarily really navigate domestic law and regulations, and their main challenge evolves around meeting disclosures. It evolves around meeting disclosure requirements, governance standard, and investors protection rule set by national regulators. For the multinational corporation, they face the added complexity of complying with multiple jurisdictions, and this requires balancing regulatory risk and aligning global operation with local requirements in each country. And a key challenge for MNC, multinational corporation, is managing compliance with overlapping and sometimes conflicting legal framework. In conclusion, corporate finance law are critical for the functioning of a modern economy, and they provide the structure for capital markets, protect investors, and also hold companies accountable. While regulatory frameworks share a common goal of market integrity, their specific approach and a firm's operational context determines the complexity of the compliance, whether as per local or global. And a deep understanding of this framework or legal framework is essential for sound financial decision making in any business. Thank you.